Good afternoon, folks. Happy Friday. Welcome to the weekly wrap-up for July 22nd, 2022. Hope everybody's had a great week. Certainly not the best day in the markets, but all in all, not a terrible week when all things considered. Let's go ahead and jump in and take a quick look and see how the indexes did today. The Dow Jones was down 0.43%, closed at 31,899. S&P 500 down 0.93, closed at 3961. NASDAQ down 1.87%. That really took a beating in the tech sector. Closed at 11,834. Small caps down 2%. The VIX actually was down 0.35%. It's currently sitting at 2303. That is a little odd to see the VIX move in tandem with the S&P 500. All right, the other exchanges here in the Americas: Canada down 0.42, Brazil down 0.11, Mexico down 0.21. Jumping across the pond, Germany was up or basically flat. It closed up 0.05. UK about the same, closed up 0.08. France was up 0.25%. Euro stocks flat. Netherlands up 0.06, Spain up 0.49, Italy up 0.07, Switzerland down 0.35, and Portugal up 0.89. Moving a little further east, over to Russia, the MOEX up 2.1% and the RTSI up 1.69. Headed over to the Asian markets, Japan up 0.4%. Australia down 0.04, so basically flat. New Zealand down 0.21. Moving over to China, the Shanghai down 0.06, so basically flat. SCSE component down 0.5% at down 0.49. The China A50 up 0.48. The DJ Shanghai flat at down 0.09, and the Hang Seng up 0.17. And the Taiwan weighted came in at up 0.08% for the day. So not a terrible day in the markets, but certainly not outstanding, all things considered. All right, well, let's take a look and see how the indexes did for the week. So like I said, today was a down day, but for the week, the Dow Jones appears to have been up about 1.12%. The S&P 500 looks like it's going to finish the week off at up 2.02%. The NASDAQ looks like it's going to finish at 2.44% in the positive. The Dow Utilities looks like it was flat for the week at down 0.08. And the Dow Transports finished off the week up 4.02%. So that is the definite bright spot. Was the Dow Transport. So, let me zoom out and we'll take a look and see at the Dow Jones and see how it's been trending against that line of resistance. We can see here that on, what day was that? Tuesday, we broke through this resistance line and had two more positive days. And then today we've taken a step back. So, what to watch for is, will this continue, is this the high point? Are we going to fall back in line with this downward resistance, or are things going to break through this, for the long term? I would guess it's probably going to line up with everything else, but, it's never too early to change a trend. So, all right, let's get to this week's economic data that came out. Come on, cooperate with me. There we go. All righty. This week's U.S. initial jobless claims. I know I covered this in an article yesterday, but we came in at 251,000. Forecast was 240. So 11,000 over forecast. Same with continuing jobless claims. They came in over forecast at 1.384 million. The forecast was 1.34. So again, we have been kind of ticking up a little bit over the last few weeks. Again, is this part of a longer term trend, or is this just something more seasonal? Time will tell. U.S. housing starts came in at 1.559 million. The forecast was 1.58 million. So a little bit below forecast. And as you can see, over the last couple of months, we have been trending down since the high point in May. U.S. existing home sales came in at 5.12 million. Forecast was 5.38. So again, not dramatically off forecast, but again, if you look at the longer term trend, you can see that going back to February, we've really just been slowly trending in a downward direction. All right, and next up, the U.S. Leading index month over month came in at a negative 0.08. Forecast was negative 0.5. So again, a little worse than forecast. It's kind of the trend right now. Everything is just a little bit worse than we expect. So, again, this could be, a longer term trend or something short term. All right. U.S. Manufacturing Purchasers Managers Index came in at 52.3. Forecast was 52. So that was a little bit above what we were expecting. All right. So let's see here. Next up, got some articles. First one is just the market recap. Stocks sink as social media weighs on tech sector. U.S. stocks sank on Friday, dragged down by tech as social media weighed on the sector. Skip that part. Snap Inc. shares tumbled 39% after it said inflation and competition hurt advertising demand, and it declined to forecast results. It was the slowest ever sales growth as a publicly traded company. Snap, the owner of the disappearing message app Snapchat, said it's going to cut back on hiring, as have other large media companies. Again, that seems to be a trend right now. Twitter Inc. missed expectations for profit, revenue, and user growth and blamed its performance in part on its battle with Elon Musk for chasing away advertisers. Yeah, okay. The company is suing Musk in Delaware to force him to make good on his $44 billion takeover, which he wants to scrap. Personally, I think he's more just trying to get a better deal. But if he gets out of it for $1 billion, he can certainly afford it. Twitter shares rose 1%. Revenue of $1.18 billion fell short of the $1.33 billion forecast. Other social media stocks were falling, including Meta Platforms, which was down 7%. In the broader view, so far 91 S&P 500 companies have reported earnings, and more than 3/4 of them have beaten expectations, Reuters reported. Oil fell. Crude oil WTI futures fell 1.6% to $94.78 a barrel, and Brent oil futures fell 0.5% to $103.30 a barrel, and gold rose 0.5% today to $17.21 an ounce. All right, so it wasn't all bad. Next article we got here, dollar shrugs off dismal U.S. data to edge higher. So it's been one of the bright spots over the last year and a half, 2 years, is the dollar's surged back well over 100 on the dollar index. The U.S. dollar shrugged off early weakness to edge higher against a basket of currencies on Friday after data showed U.S. business activity shrank for the first time in nearly 2 years in July, and as a services slowdown outweighed manufacturing growth. S&P Global on Friday said its preliminary or flash U.S. composite PMI output index had tumbled far more than expected to 47.5 this month from a final reading of 52.3 in June. We just talked about the 52.3. With a reading below 50 indicating business activity had contracted. It is a development likely to feed into vocal debate over whether the U.S. economy is back in or near a recession after rebounding sharply from the downturn in early 2020 at the start of the COVID-19 pandemic. The dollar found some support from safe haven flows late on Friday as investors' appetite for riskier assets diminished, with U.S. indexes selling off on some weak earnings reports. Against a basket of currencies, the dollar was 0.1% higher at 106.73. For the week, the index was down 1.2%, but it had hit an all-time high, or maybe not all-time high, but it hit a decade high earlier in the week. Friday's dismal U.S. data reflects a hit to sentiment similar to that seen elsewhere around the globe. Bipan Rai, North American head of FX strategy at CIBC Capital in Toronto, said, quote, "This is a reflection of tighter financial conditions and also the fact that inflationary pressures remain elevated," Ray said. Ray, however, said he wasn't reading too much into the dollar's weakness on Friday. Quote, "Even if the U.S. economy does slow down somewhat, I don't think you can extrapolate some sort of medium-term dollar weakness because we are seeing similar things elsewhere," he said. Overall activity in the Eurozone shrank due to an accelerating downturn in manufacturing and a near stalling of service sector growth, with inflation pushing consumers to cut back on spending. S&P S&P Global's Composite Purchasers Managers Index, a good gauge of economic health, showed the euro was 0.4% lower against the dollar at 101.96. The British pound slipped 0.2% against the dollar to $1.19 and 0.79 after data showed Britain's businesses grew at their slowest pace in 17 months in July, fueling concerns about a slowdown in the UK economy grappling with inflation at a 4-decade high. The risk-sensitive Australian dollar was 0.26% lower at 0.6911, while the Kiwi fell 0.17% to 0.6242. In cryptocurrencies, Bitcoin was about flat on the day at 23,074.82, on pace to finish the week up about 10% as traders bet the recent bout of weakness had engulfed the market was over. So yeah, the dollar still remains strong. I don't know how much longer that will continue, but time will tell. It seems to be one of the safer asset classes at this time, just sitting in cash at the moment. All right, and last article I got here, U.S. business activity contracts in July for the first time in 2 years, surveys show. U.S. business activity contracted for the first time in nearly 2 years in July as a sharp slowdown in the service sector outweighed continued modest growth in manufacturing, painting a glum picture for an economy stunted by high inflation, rising interest rates, and a deteriorating consumer confidence. S&P Global on Friday said its preliminary or flash U.S. composite output, we just talked about that, is expected to be 47.5 for this month from a final reading of 52.3 in June. And readings below 50 indicate business weakness. July's fall marked the fourth monthly drop in a row and was largely driven by pronounced weakness in the services sector index, which fell to the lowest since May of 2020 at 47.0 from 52.7 a month earlier. This was enough to offset relative steadiness in manufacturing, with the group's factory activity index edging down to 52.3 from 52.7, indicating the sector was still growing, but not at its weakest pace since July of 2020. Economists polled by Reuters had a median estimate for the sector services index at 52.6, while the manufacturing index was seen coming in at 52. Quote, the preliminary PMI data for July point to a worrying deterioration in the economy. S&P Global Chief Business Economist Chris Williamson said in a statement, quote, excluding pandemic lockdown months, output is falling at a rate not seen since 2009 amid the global financial crisis, end quote. S&P Global's measure of new orders in the manufacturing sector, outstanding business in the services sector, and future expectations in both fell to levels not seen since the first year of the pandemic. The report was the latest in a spate of economic indicators that have, quote, surprised to the downside relative to economists' expectations and have fueled anxiety from Wall Street to Main Street over whether the economy is stalling out. Citigroup's U.S. Economic Surprise Index last month registered its lowest reading since May of 2020 and has remained negative so far in July. S&P Global data point to U.S. gross domestic product falling at roughly 1% annualized rate, Williamson said. The economy contracted at a 1.6 rate in the first quarter, largely because business inventory management issues, and the government next week will provide its first reading of output in the second quarter, which some models suggest will show a second straight contraction. The report also painted a picture of softening employment scene, which so far has defied expectations for a notable slowdown, with unemployment still near a half-century low. S&P Global said its manufacturing employment index dropped to the lowest since July of 2020, while services employment registered its weakest growth since February. On Thursday, the Labor Department reported that new claims for jobless benefits rose to the highest since November last week, and that as of a week earlier, the total number of people drawing unemployment assistance had risen to the highest since April. That said, both remain below historic norms. So again, it's kind of a good news, bad news situation. The economy does appear to be slowing. Is it the end of the world? No. Will we go through this and be fine at some point in the future? Yes. So certainly don't panic at all. All right. Well, that's everything I had for today. It's a quick one. We have to get on the road. We're headed over to Estes Park for the evening. So my apologies if I'm talking like a really, really fast person, but my wife's waiting in the next room, waiting for me to get off this this call or this recording. So hope everybody has a great weekend. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information is there. And I'll be back on Monday with the weekly economic update. So everyone have a great weekend. Bye-bye.